Hey, how's it going, everyone? Welcome to Finance with Avrin. In this video, I'm going to get into some chip industry insights with two major players in the chip industry, Intel and Taiwan Semiconductor. I'm going to get into the stock analysis and some major current news that's going on, how they're competing against each other, and how they're also working together. Let's get right into it here, starting with some major current headlines. The United States is taking a 10% non-voting stake in Intel, which is valued around $10 billion, which is converting the CHIPS Act funding into equity. Now, the CHIPS Act funding was already in progress, already going on, to bring more manufacturing in the United States. Intel was getting a lot of that money. Now, with President Trump in the United States, his administration, they've decided to turn this pretty much kind of into an equity stake. So the United States is going to have 10% equity in Intel. This is major because this doesn't happen often. And also this is major because, this administration has a push for more happenings, more manufacturing, more economic growth in America. Big America focus with this stake in Intel. That is definitely what they're going for with the semiconductors technology space, because chips and semiconductors are very important to innovation, growth, and the economy. A lot of things that you have, I'm sure, in your house has chips in it. Very important. And with the growth of AI, that's going to become even more important. And another reason why this stake is important, because of course, President Trump and his administration are going to want this to be a successful, pretty much deal, and want to, be able to look at this a year, 2, 3 years, 5 years later and say, look at what we did. This stock was at this price here. This company was doing this. They weren't doing this, but now they're doing this, and the stock price is at that, and so forth. So this is a major point. And with that news, Intel stock surged between 5 and 7% today, which ended the day up 5.5% after the announcement, reflecting the market optimism tied to this immediate capital and policy support. Because that immediate capital, they're getting injected with the billions of dollars into that company to be able to use it for their growth, and also the policy support. Because with the United States having that stake in Intel, what do you think? Do you think they're going to make like policies and rules and regulations that are going to hurt Intel? I don't see that as a likely situation. In anything, I see possibly the opposite. Maybe, a little bit more leniency, maybe some favoritism with the policies. Now, earlier this year, President Trump publicly called for Intel CEO Lip Butan's resignation due to his ties in China. However, Trump has since refrained from that stance recently as this deal was formed and finalized. Now, of course, there's going to be a closer connection, closer relationship with that CEO and Trump now with this stake in this company. Can lead to that CEO continuing to be in that role for longer, or possibly him being in that role for shorter. So we'll see how this goes. Of course, this is going to be ongoing news with this stake that the United States has in Intel. Now, another big investment in Intel that was made recently is SoftBank, a major financial company that does often invest millions and billions of dollars into companies. And now SoftBank is investing $2 billion into Intel. And with that, they've become Intel's 6th largest shareholder, around a 2% stake. Now, SoftBank does not have a board seat, and there's no kind of chip buy obligation with this. So there's not any kind of deal going on with this where SoftBank is saying, okay, we're going to invest this, but we're going to get this discount on chips, or we need you to do this for us with chips, or, there's no kind of Intel like guarantee that SoftBank is going to continuously keep buying chips from them and be a customer. None of that. This is just a pure investment in the company. So that's a major headline. Now, recently Intel has been in the news because of how rough things have been going in the company, even though this year actually they're up, and I'll get into that and show you the chart of that. But in the past couple of years, Intel has been trimming their workforce for about 17% in the headcount in 2023 and 2024. And the new CEO announced another round of layoffs in 2025, including 5,000 layoffs in the past week. Now, also, let's get into a stock analysis of Intel. I'm going to do this as well for Taiwan Semiconductor. This video is about both of those companies with a little bit more going on with Intel because of the current news. Now, currently Intel stock price is about $24.80 with a 52-week range of $17.67, that low up to $27.55. So they're approaching that 52-week high right there. And with the momentum they have going on recently, I would not be surprised if they hit that, if they just continue with this momentum and the good news. And let's go over here how Intel stock has been performing for the past 3 months. It's up about 20.6%. Year to date, 23.69%. For a year, the stock is up about 23.38%. So for the past year, Intel stock has been performing very well. However, if you extend out, zoom out further, it tells a different story. So for the past 3 years, Intel stock is down negative 25.66%. For the past 5 years, the stock is down negative 49.68%. So you see where Intel was, and you see where they have been, and now you see where they are. So you kind of get a story right there of how Intel stock has been performing. Now, the market cap for Intel is about $108.55 billion, and their PE ratio, the price to earnings ratio, is negative. So they don't really have one. You'll see negative numbers out there, negative this, negative that, but they don't have positive earnings, which means they don't have a PE ratio, a positive PE ratio. So that is definitely not a good thing because, you know, not having earnings is not a good thing as a company. You want earnings, you want positive earnings and positive cash flow, which we'll get into that. You see it at the bottom of the table. They don't currently have that. So also, another thing that's kind of rough with Intel is that they suspended their dividend in 2024. They used to pay a dividend. However, with their financials not going so well, they decided to suspend that. And, you know, that is definitely a good thing to do as a company. If you can't afford to pay the dividend, there's no point in keep paying a dividend. If you need to use that money to get yourself back to being able to pay a dividend and your financials improve them, that's probably the better route to go. Now, it may make some shareholders upset, may make some shareholders happy, say, okay, good, you did the right thing. We don't need the dividend right now. Make the company better, you know, get some stock price appreciation. Now let's get into some more ratios here, starting with the debt to equity ratio. Now the debt to equity ratio measures how much debt a company uses to finance its operations relative to shareholder equity. Intel's debt to equity ratio currently 0.42. Now the current ratio assesses a company's ability to pay off short-term obligations with short-term assets. Intel's current ratio is 1.24. Now a quick ratio is like a current ratio, but it excludes inventory, giving it a stricter view of liquidity. Sometimes you'll see this referred to as an asset test. Now the quick ratio for Intel was 0.92. Now price to sales for Intel is at 1.94. Price to sales is going to compare a company's value to its revenue. And the price to book is going to compare a company's market price to its book value, also its net assets, basically, when it comes to book value. The price to book ratio for Intel is going to be 0.97. And Intel has total shares outstanding of 4.38 billion, and a percentage of the float that's shorted of those shares is 2.76%. So that is not a high short percentage. I wouldn't say this is a highly shorted stock or anything like that. Far from it. There's definitely stocks out there with a larger percentage of the float shorted. Now, could it be lower? Of course, and Taiwan Semiconductor has a lower one. You'll see that. I'll tell you about that one, but not a high amount of shares shorted. So that is interesting. That's kind of telling you that the market doesn't see this stock declining too much. There's not a lot of bets on this stock declining a lot in the near future or in the certain future. Other things I would be concerned about, like the cash compared to the debt. Total cash for Intel is $21.1 billion. However, the debt is $50.8 billion. Now, the second quarter 2025 operating cash flow for Intel is $2.05 billion. However, the second quarter 2025 free cash flow is negative $1.5 billion. And Intel hasn't had a fiscal year of positive adjusted free cash flow since 2021. So the past few years have been negative in terms of cash flow with them. And that is an area of concern for me with this stock, is the cash flow. Now, I do not currently own Intel stock. It's one that recently I was kind of thinking about getting into, and mainly because of the United States having that 10% stake in the company, because I could see that being a great thing for this company. And of course, President Trump and his administration would like to be able to say, hey, when we had that stake in Intel, when we first started with them, they were doing pretty rough. The stock was in the $20 a share. And now, some years later, now it's at $100 a share, and the stock is doing great and the company's doing great. Of course, that is probably a goal, and I'm sure Trump and his administration would love to be able to say something like that and prove something like that and do something like that. So that's kind of one reason why I was thinking about maybe I should just, make a small position in this stock or something. Not too sure about it. However, I am sure about the next stock I wanted to tell you about. And of course, that is Taiwan Semiconductor, and the stock analysis on them Full disclosure, I do own this stock. It's in my individual stock portfolio. This one that I started a couple years ago. Now, with my current position in Taiwan Semiconductor, ticker symbol TSM, I'm up about 42.36% on it. So up nicely on this stock. And I do want to continue dollar cost averaging into this one. Stock price of TSM currently about $233.05, 52-week range from $134.25 up to $248.28. And now let's go over the stock price action of Taiwan Semiconductor, ticker symbol TSM, for the past 3 months. It's up 21.36%. Year to date, the stock is up about 17.98%. And for a whole year, the stock is up about 36.3%. When you zoom out further, it still has been doing very well. For the past 3 years, TSM is up about 174.95%. And then for the past 5 years, the stock is up about 197.41%. So a better story is being shown here with the stock price action of Taiwan Semiconductor. Market cap of this stock, $985 billion, right around that amount. It was at $1 trillion earlier this year. Kind of went down some. It's going to be right around that amount. Would not be surprised if it gets to $1 trillion here soon. And you may still see that number in some places, but it's right under $1 trillion around that amount for the market cap. PE, price to earnings ratio, 26.5. So it is trading at somewhat of a premium. However, growth stocks do sometimes tend to justify the PE ratio. Not all growth stocks, of course, but growth stocks like these big tech companies that have this, higher 20s, 30s, 40s PE ratios, and they just keep justifying it, and the price just keeps going up sometimes. Yeah, there's pullbacks here and there, and then of course the PE ratio gets adjusted and everything with the price of the stock and the earnings. Debt to equity ratio with Taiwan Semiconductor, 0.20. Current ratio of 2.37 and quick ratio of 2.15. So those numbers right there are telling you and showing you that Taiwan Semiconductor can pay its debt quickly and efficiently, short term, and they can pay the long term as well. And we'll get into that cash and debt here soon. Total shares outstanding, 5.19 billion, and a percentage of the float shorted, 0.54%. So not a shorted stock at all. No kind of short squeeze coming up for this one. Total cash for Taiwan Semiconductor, $86.6 billion. Total debt, $32.2 billion. You see that right there? They could definitely quickly pay off their debt if they wanted to. And you may be wondering, why have a high amount of debt if you have so much cash you could pay it off? Companies often do this sometimes because they can use the money that they would use to pay off their debt better and more efficiently and make more money from it than just paying off their debt. And you can actually see that yourself as well as an individual investor, as in your personal finances. You may have some debt out there that has a lower APR on it, lower rate on it, and then you may have money you could pay it off with. However, you may be able to use that money to make more than that low rate on that debt, either through the market or high yield accounts, things like that. So you may decide to do that for a while and just pay the debt off slowly each month or something like that. Now, of course, with consumer personal finance and consumers, there's definitely debt out there that's not a good idea to do that with. You have a double-digit credit card. Sometimes it's good to pay off debt all at once for sure. And sometimes the money can be used a little bit more efficiently. It just depends on the rates and the returns for sure. Now, with credit card debt, that's something typically you want to just pay off and not have that lingering, because usually it's around 20-something% APR, and that's no bueno to see that compound. Now, second quarter 2025 operating cash flow for Taiwan Semiconductor, $16.3 billion. Second quarter 2025 free cash flow, $6.6 billion. That's what I like to see. Nice positive cash flow, and Taiwan Semiconductor definitely has that going on compared to Intel, which I forgot to delete that part right there from the table. Just to remind you, Intel has not had a positive adjusted free cash flow year since 2021. So a little comparison here with Intel and Taiwan Semiconductor. But yeah, that is the quick stock analysis on Taiwan Semiconductor. Now I want to talk about a couple of terms that you see often when you're researching semiconductor and chip companies. And I think it's very important to understand what these terms are. That way, when you're reading the news and during the research, you understand more of the underlyings of what's going on at the actual company. And one of those terms is nodes. A node refers to the manufacturing process technology used to make chips, usually measured in nanometers. Smaller nodes equals more advanced, allowing chips to be faster, more power efficient, and denser. more transistors packed into the same space. Of course, this is very important for technology for many reasons. Do you ever see technology like revert? If you see like, and it's going to be slower than last year's model, that screen's not going to be as nice, but we thought you all might like it. Here's the new iPhone, the new Google Pixel phone. The camera, we decided to go down to 2 megapixels. You just don't see technology companies reverting back and doing things like that. Now, an example of this, Taiwan Semiconductor is already at 3 nanometers mass production, moving towards 2 nanometers. Intel is racing to catch up. So they're aiming for Intel 3, 20A, 18A nodes between 2024 and 2026. They kind of have this time frame going on with last year up until next year. And takeaway from this is that Intel's delays in reaching advanced nodes have costed leadership versus Taiwan Semiconductor and Samsung. So catching up is essential for its foundry ambitions. Intel's going to keep playing catch up. While Taiwan Semiconductors, they're just on top of their game, just working on this. This is efficient. Here's the next model. Here's this. Just like when it comes to yield. Now, when I see yield, I often think of, annual percentage yield, APY. But right here, yield means something else. So when it comes to yield in the chip industry, yield in this sense is going to be the percentage of chips from manufacturing a wafer that actually works and can be sold. Now, a high yield equals efficient, profitable manufacturing. A low yield equals lots of waste, higher costs, lower margins. So it's like, this comes out of a machine, we make this. How much of this pie, how much of this square, how much of this can we actually use and sell? Oh, we can use and sell all of it, or 90% of it, 95%. Oh, that's great. Okay, here we go. Okay, here's another one. Boom. How much of this block right here can we actually sell and use and is actually efficient? Oh, 20% out of all of this, just that. We got to throw away most of it. Oh, now we got to do all that over again to get... You understand. So yes, Taiwan Semiconductor is famous for industry leading yields, 90% plus at mature nodes, giving it both cost efficiency and reliability. So Intel, meanwhile, has struggled. New nodes often have yield problems, delaying product launches and hurting customer confidence. Now, a takeaway from this is even if Intel builds advanced fabs, its yields are poor, so it can't compete on cost or volume with Taiwan Semiconductor. When it comes to Intel versus Taiwan Semiconductor, of course, Taiwan Semiconductor is the clear winner in this competition. However, it's not always a competition from them. And this is very interesting because they do actually work together, have worked together, and will continue working together. So it's not completely a competition between Intel and Taiwan Semiconductor. There's some collaboration going on here. In specific examples, Intel's ultra low power mobile SoC's Lunar Lake codename are entirely fabricated at Taiwan Semiconductor's 3 nanometer process, making a significant departure from Intel's traditional in-house manufacturing. Another example, Intel's Meteor Lake processors utilize a hybrid architecture, combining tiles fabricated on Intel's own processes with others produced by Taiwan Semiconductor, including 5 nanometer and 6 nanometer nodes. There you go right there. Another example of how Intel is working with Taiwan Semiconductor. So who is this benefiting? Both of them. And also there's a joint venture going on with these two companies. Intel and Taiwan Semiconductor have tentatively agreed to form a joint venture to operate Intel's foundry business, with Taiwan Semiconductor set to own a 20% stake. So Taiwan Semiconductor even somewhat has a stake in Intel with their foundry business. So does Taiwan Semiconductor want Intel to be successful? Yes, because it would help them. Now, does Intel need Taiwan Semiconductor? More so than Taiwan needs Intel, for sure. Now, implications for Taiwan Semiconductor with this: increased foundry revenue. As Intel outsources more production, Taiwan Semiconductor stands to gain a larger share of the semiconductor manufacturing market. Enhanced technological collaboration. Joint ventures and partnerships can lead to shared innovations benefiting both customers. So this could be a win-win for both of these companies in this situation. Now, also the strengthened market position. By supporting a major player like Intel, Taiwan Semiconductor reinforces its position as a leader in the semiconductor manufacturing. And other customers are looking at Taiwan Semiconductor like, wow, it's a really stand-up company. They're just working with their competitor. That is kind of what's going on right there in a sense with Taiwan Semiconductor and Intel. Now, there are some risk and catalysts I want to talk about because of the current news that's going on with Intel. So if you're an investor of Intel or you're thinking about being an investor of Intel, these are some things you're probably already thinking about or have thought about or are going to think about. Now, with risks of Intel, of course, one of them is going to be the execution deficit versus Taiwan Semiconductor in terms of nodes, yields, and customer base lagging. They're still playing catch up. They're playing catch up where Taiwan Semiconductor is on to the next one, on to the next. Now, also political risk from the federal state. So as I was talking about during that first part of the video with the U.S. having a stake in Intel, there's a lot of positives that can go from that for both Intel and the United States. Now, however, negatives that could happen, with Intel having this big partner, so to speak, who has this big stake in them, they may try to kind of push them to do this or go over there and do that. More trips to DC to have this meeting and this. Now, dilution risk with future equity raises. If Intel needs to continue having more money, they may have more equity raises. So they may have to give out more outstanding shares of stock, increase their outstanding shares of stock, which is going to dilute their current stockholders. You have 1,000 shares of Intel. What do they have? Like 4 billion or so, shares outstanding. Well, maybe they have to go up to 5 billion shares outstanding. Now, in your 1,000 shares you have, you still got 1,000 of them there, but they're kind of worth less because, there's more shares out there now. You used to have 1,000 of 4 point, something billion. So you had a piece of that, now you only have 1,000 of 5.8 billion shares. So those are some risks right there with Intel. Now, catalyst for Intel, the chip stake and the SoftBank capital, those injections of capital into the company could definitely be a great thing. It got catalyst, a benefit to them. So you have a lot of capital. So it should be easier for you to grow, to make some more innovations, to become more efficient. So what you would hope with that could be a catalyst. Now, potential major customer signings. With the improvements of the company and the United States stake, there may be some major signings going on. Companies may look at Intel a little different now, like, oh, they got the backing of the United States, so to speak. They got a stake in them. Also, actual node yield breakthroughs. If Intel can play catch up better, if they can get more efficient, have better nodes, have better yields, that could definitely be a catalyst with them. And with them having this capital injected in them, this could definitely come at them easier than it would be before they had these backings and this capital. Now, if I was an investor in Intel or thinking about investing in Intel, this would be my watch list for this company right now. It would be that foundry revenue growth, the yield progress on nodes, customer announcements, and more details on the United States stake that they have. Great going on with Intel and for Intel. And if they're able to use this capital, to use this stake to be an improved company, this could be a turnaround story for them for sure. And then you have Taiwan Semiconductor. You can't really talk about the chip industry much without mentioning Taiwan Semiconductor, but I didn't want to just mention them. I wanted to actually have a stock analysis of them and talk about them in relation to Intel and to be able to increase their growth as Intel increases their growth. So there's some collaboration going on here for sure. And that is it with my video on Intel, ticker symbol INTC, and Taiwan Semiconductor, ticker symbol TSM. Hope you all enjoyed the video. Take care.